Good morning, everyone. I want to thank everyone for joining us this morning for maybe an hour, maybe a little less. It's because this is a special time for most of you right now. You've been at it for almost a week with the enrollment period for those of you that are working with Medicare, and many of you are. And that's kind of a lead in to what we're going to talk about today. I'll go over a little presentation of why and how to sell annuities. I know some of you already do. Some of you are thinking about it. All of you should consider it, because other than now through the 15th of December, and I'm sorry, the 7th of December, and then another enrollment period for the first quarter of next year, that leaves you about 6 or 7 months that I know very few of you are going to be sitting on your laurels. You've got to do something else for those months. The fact that you already have a number of people that trust you, that you can work with, because people do need to consider annuities. And that's what we're going to talk about today. I'll just say this. Regardless of the type of insurance that you sell, in addition to medical health related insurance, you may sell life insurance. You may be connected with a property and casualty agency where they sell homeowners and automobile insurance. But when you think about insurance, what it really is providing financial security for people that trust you, that depend upon you, because they're not the experts that we are doing this every day, studying, looking, handling different situations, comparing different products, providing the best products to your clients. We're all selling financial security. If someone loses their home, that's a lot of money. Their car. If someone is not prepared for their health insurance. As a matter of fact, most people that become financially depleted is because of, whenever there's bankruptcies, it's because of health insurance costs. So that's one job you're already doing, to provide a huge amount of financial security. And that's what annuities do as well. So we're all looking at helping to make people more secure financially now and for the rest of their lives. Let's look at why you should offer annuities to your clients. Here are just a few uses. I could have put a lot more in, but I didn't have any room on this page. But most people look at annuity as a retirement income source, and we're going to talk about that in a few minutes in terms of filling the gap between what people expect to receive during retirement and what they really need during retirement to maintain the lifestyle that they've become used to. It can be a source of income replacement, just like life insurance. An annuity can replace income when someone passes away. Annuities can help pay final expenses. There can be a legacy left for children, grandchildren. There can be money left for charitable organizations. We think mostly of maybe your church, for example. For those that haven't planned by taking a long-term care type of policy, if someone has money in an annuity, it can help pay for those health expenses as we move along in age and get older and become more infirm. What about using money that you saved in an annuity to pay off a mortgage? Just think about how much you pay each month for your mortgage. Multiply that by 12. And what if you could knock off 3 or 4 or 5 or 6 years with money that you've saved in an annuity? Think of how that would impact your cash flow when you're in more of a fixed income situation after retirement. How about paying for college expenses for your kids, for your grandkids? And most of all, to have money in an annuity that you really may not have any specific needs for or plans for. It is a layer of financial security that will allow you to sleep a little bit better at night, knowing that it's there in case that it's needed for whatever. I'm going to go over a little bit about the basics of annuities. As a matter of fact, when I got into the business in the late 70s, annuities had been around a long time. I think the first annuity in the United States was issued in 1795. That was even before I got involved in the insurance business. But IRAs really were the stimulus for more attention to annuities. The first the first IRA came under one of the federal regulations, one of the acts that became effective in 1975. So when I got into the business, IRAs were a new tool that most people placed in annuities. So that's what got me started in the annuity business a long time ago. And yes, there have been a lot of changes in products, in design, in evolution of what has become one of the more popular types of financial instruments that there are today. An annuity can be a great tool. And when you understand as an agent why it's important for people to consider annuities in helping them reach their financial goals, it can be a very, very strategic, important component of one's financial planning, especially as they head into retirement. An annuity is simply a savings plan that can guarantee an income that someone will not outlive, or it can be just that safety net there to know that there's money there if and when needed for whatever may come up, or to leave for those that mean a lot to you in your life. It is a great way, an annuity, for many people, maybe most people, to help fill that gap when someone retires and they've been used to having a regular paycheck every week or every month or every couple weeks. That's not going to be there anymore. Yeah, some people have pensions. Most people have Social Security, or if they're a federal employee, might have a thrift savings plan. If you're with a nonprofit organization, you might have a tax sheltered annuity that was part of your benefits. You may have an IRA. You may save money in CDs, other investments, stock market. And yeah, you may have money buried in the backyard. I used that once as just an example. And when we took a break, an accountant who was there said, "Let me tell you about what old Jake did about burying money in his backyard." I won't have time to go through it today, but just imagine someone burying a fortune in their backyard for his wife and his children and grandchildren. But he passed away a little bit before he expected. He forgot to tell anybody where that money was buried in the backyard. And his backyard was about 1.5 acres. Let's just say there was a lot of digging going on after he passed away. So what we try to do is to fill that gap between that income that was coming in regularly and what those expenses are going to be at retirement. And maybe we need to have something extra between all those things that we expect to come in at retirement and what our needs really are to maintain the same lifestyle. As a financial professional, as we all are, regardless of how much or what kind of insurance we sell, it's our obligation when we're working with people that are not as knowledgeable as we are, because it's something we do every day. Since I'm an old school teacher from way back, I think it's an important step to educate our prospects, our clients, to let them know how they can have maybe a better life when they reach that retirement age, and why an annuity can be an integral part of that retirement plan. Here are just a few things off the top of my head that might be reasons why your prospects, your clients, your friends, your neighbors, your church members, your barber shop, whatever it may be, the contacts that you have. You may have people that you come in contact with or may be referred to that would like a reliable, guaranteed, regular, scheduled income after they've retired. There may be people that you work with and see every day. Those that are in a higher income may have maxed out their contributions to their 401k or their SEP or their IRAs, and they're looking for somewhere else to put money where there can be some tax benefits built in. If your clients have somebody in their life that they would like to make sure that that's taken care of, like a spouse, children, special needs child, for example, grandchildren, after they're gone, this could be a great way to leave something for them to make their path through life a little bit easier. Just about everybody that you work with and talk with, they would sleep a lot better if they feel more secure that they will not outlive their income. And we're going to talk about longevity in a couple of minutes as well. What about people that have money that would like to choose when they're going to pay taxes? Taxes are certainly an important component when someone is planning for their retirement income. As a matter of fact, when someone thinks of retirement, their primary focus is on the amount of money that's going to be coming in from their retirement plan, their 401k, money that they've saved, IRAs, whatever it may be. But wouldn't it be nice, because most of those things, including Social Security, for most people are going to be taxable, even in light of the new big, beautiful bill that was passed, there's still going to be taxes due on Social Security. But wouldn't it be nice if someone had some control over when they pay taxes, and by doing so, they might choose how to lessen their taxes? And certainly an annuity can be a tool, and I'll give you some numbers in just a minute to show you how that can be beneficial to those that have annuities compared to other types of income sources. Another big component that many people are not aware of, there are a number of companies that sell annuities that have benefits that are related to a death benefit. In other words, when you take out an annuity and you pass away, there may be more than the money in that principal in that annuity. There may be extra benefits for basically life insurance built into an annuity for those people that are not healthy enough to qualify for life insurance. I've made a number of sales to people that bought an annuity who wanted life insurance but couldn't obtain it, because there are a few companies and a few annuities that have an extra benefit that is related directly to life insurance. And another thing, a lot of people that are conservative think that CDs are the way to go, but CDs actually erode the buying power of the money that they've put away. Here are some numbers. The tax deferral on all annuities, whether you pay it as a lump sum or whether you pay on a flexible schedule over a number of years, the earnings in an annuity are tax deferred until those gains are distributed and somebody takes those gains as income. Unlike CDs, the money that stays in an annuity earns interest itself and perpetuates the growth of the money within that annuity, because unlike a CD, that money doesn't come out each year. We can defer some things and reduce some things that Uncle Sam would like to get his hands on every year, like on a CD. Here's an example. Let's say that someone, to keep numbers easy, I used 100,000. You could use 10,000. We can use whatever number. But if someone put in 100,000 in a CD 20 years ago, and the average has been about 4%, actually a little bit less over the last 20 years. But I'm doing apples to apples here when I put this together. And for good or for bad, I was a math major in college and I got paid to teach math for 5 years before I got into the insurance business. But anyway, if someone had put $100,000 in a CD 20 years ago, paid taxes on the interest that was earned each year, after 20 years, they'd have $186,000 and some change. If someone had put that same $100,000 in an annuity 20 years ago, and I'm showing this at 4%, even though annuities have averaged more than that over the last 20 years, but I wanted to do an apples to apples. Because the money stayed in the annuity and was not paid for taxes because of the tax deferral, that same 100,000 would have grown after tax on the CDs, and there's no taxes yet coming out of the annuity. Your account would have $234,763 in the annuity. And if somebody took it all out at one time, which wouldn't be the wisest way to handle that, if they did take it all out at one time, they would still have over $201,000 just because of the tax deferral. So there's a difference of $15,000 there just because they had the money in the annuity rather than in a CD and had to pay Uncle Sam every year for 20 years. So that's why when you look at inflation, if someone earns 4% and they're in a 25% tax bracket, they're really netting only 3%. And when you compare 3% to inflation, we're talking pretty much about the same amount. And there have been many years, as we know recently, when the inflation rate was well above 3%, when actually money in fixed instruments like CDs that are taxable annually, you're losing the buying power of your money, simply put. So these are some arguments, some things that we can provide to you when you're talking with people to let them know that an annuity has many advantages, including there's no probate. If somebody passes away with an annuity, whatever's in that annuity doesn't go through probate and not subject to any estate taxes, probate taxes after death. And by the way, annuities almost always earn more interest than is offered on a CD. Okay, there are two classifications of annuities. Those that are qualified are annuities on which there has never been 1 penny of tax withheld. When someone contributes to an IRA or a 401k or a tax sheltered annuity or a thrift savings plan or an IRA, someone gets to deduct those dollars from otherwise taxable income during that year, so that as those instruments earn interest over the years, and when it's time to utilize that money as income, not 1 penny has ever been taxed. That causes problems sometimes at retirement when there are a lot of other things that need to be considered, including longevity, including inflation, including the fact that people are living longer. Someone born in 1900, their life expectancy was 47 years. Someone born in the year 2000, their life expectancy was 74 years. I think now we're up to 77, 78 years. So we need to plan for when we retire. Unlike what it was in the 1900s, basically you retired if you lived that long and then you died. Not the case anymore. The largest group within our population is ages 100 to 110. So not only do we have to do without that paycheck that we've earned for 30 or 40 or 50 years, But we've got to plan to pay ourselves to meet our living expenses up until those later ages of not only the 70s or the 80s or the 90s or maybe beyond. It's great to live longer in most cases, but we have to pay for those extra years. This is where a properly designed annuity can help out. If you have money that's been in an annuity, it's been tax deferred. A non-qualified annuity, whether it's paid for over a period of time with flexible payments, contributions, or a one-time lump sum deposit, those dollars that you pay into an annuity, when the money comes out, they've already been taxed. You don't pay tax on it again. But in either case, of a qualified annuity or a non-qualified annuity, when money comes out, the taxes have been deferred. On a qualified account, all of the money that comes out is going to be taxable. When the U.S. government makes regulations, they want to make sure that they get their hands on that money. Some of you have heard about and are familiar with required minimum distributions. We often refer to them by the acronym of RMDs. The federal government was kind to us a few years ago under the Secure Act to move the age from 70 and 1/2 until age 73 when someone has money in a qualified account, 401k, tax sheltered annuity, thrift savings plan, a qualified IRA. Now they can wait until age 73 until they're forced to take money out of their account, whether they want to or not. These required minimum distributions, that opens up another door for marketing and how you can help people use those distributions, especially a lot of people would rather not take those distributions because of some of the early uses of IRA money that we talked about, or annuity money we talked about earlier. But non-qualified annuities, the money where you've paid a contribution in that was already taxed and then begins to earn interest, you're not forced to take out those RMDs. You can take money out when you want to, if you want to, when you want to, how you want to. Now, there are, many of you have heard of Roth annuities, and we're not going to spend a lot of time on that today, but those are annuities where someone can actually never pay a penny of tax. They are funded by after-tax dollars, but the interest earned is not taxable if someone meets the guidelines. And basically the two main guidelines are that they will pay out tax-free income if they have been in force for at least 5 years and the recipient is age 59 and a half or older. If those two requirements are not met, then any money that comes out of a Roth annuity would be taxable. So that's just something to keep in mind. There are Roth plans, Roth 401ks are now available, and when someone can use a Roth account, they should. They do not get to withhold their contributions from taxes, but when they're retired, their income is not taxable for money in a Roth. That was named after one of the congressmen about 20 years ago that came up with this, something that they decided to give us a few little crumbs here and there. But let me say this. If you're talking about putting money in a 401k, and you should, especially if it's Roth, and especially when your employer, like our wonderful leaders here at Messer Financial, if you participate in their 401k, they do a match on that 401k. Most employers do. So you don't want to turn down free money with that matching amount. whether it's 3% or 5% or whatever it may be, you should contribute that amount. And the money that you contribute, you deduct from your taxable income for those years. If it's not in a Roth, you're going to pay taxes on that. If it is in a Roth, you won't. But it's a choice of either paying taxes when you are working and have cash flow and income during those working years, and you might be in a better position to pay the taxes rather than to exclude those taxes when you retire. I use an analogy, and it's not mine. I read it somewhere or heard it at one of the many webinars or presentations that I've seen in my years. If you were a farmer and you had a choice to pay taxes on the amount that you paid for seed that you're going to plant for your crops, or would you rather pay taxes on your crop when it is harvested? So think of it that way. 401ks are good, but they're not great. If they are Roth, then they're very good. But again, there are going to be some people that max out because it's based on federal guidelines on how much you can contribute to you can have a Roth IRA, but you're limited on how much you can put in each year. Right now, we're looking at $7,000 or $8,000 per year. What if you want to put away 10 or 12 or 15,000 a year? Then that's when we need to look at Roth IRAs, for example. But keep in mind, you want to pay tax on the seed or tax on the harvest when you're retired. There are a number of annuity types. You don't have to memorize these. And by the way, this is recorded, so if you would like to go back and review this, if you'll just let us know, we'll provide that to you. It may take a day or so to get that out to you, but just let us know and we'll make the recording available to you. We've got multi-year guarantee annuities, sometimes called MIGAs, multi-year guaranteed annuity, where the interest rate is guaranteed for a specific period of time, and your prospect, your client, would determine that period of time. Usually they're between 3 and 10 years. There are other options. A variable annuity, which we don't work with here because it requires a securities license. And that's fine. I had a securities license for over 30 years, and I did sell a few variable annuities. This is an annuity where the contributions literally are in the stock market. You can gain a lot and you can lose a lot. I didn't like the fact that when we had a market correction that I had to hold hands with my clients and assure them that they were in the right product. So I was happy to voluntarily give up my securities license 5 or 6 years ago with a number of designations. It wasn't an easy decision, but with the evolution of the fixed indexed annuities, the FIA, which you see now down near the bottom, those have become, over the last 10 years, the most popular type of annuity. And we'll talk a little bit about that in just a minute. There also are single premium immediate annuities. If someone has a lump sum of money and they want to start taking income from it within the next year, the payout has to begin within a year after that policy is issued. A single premium immediate annuity can be a great tool. It can provide a bridge. For example, if someone wanted to wait and take their Social Security at age 70 instead of full retirement age at 67 for most people now, it gets you a gain of 8% each of those last 3 years. So if somebody had some money that they wanted to put into an immediate annuity, a single premium immediate annuity, to bridge that and wait until age 70, maybe they retired at 65 or 67. A single premium immediate annuity could provide the income needed to gain that 24% increase in their Social Security income at age 70. A single premium deferred annuity is when someone puts in a lump sum. A flexible premium was when someone pays $100 a month, $250 a month, whatever it may be, for a period of time. That's another way to accumulate money within an annuity. I mentioned the fixed index annuities, which first hit the market in 1995 and have, over a relatively short period, become the most popular type, and we'll talk about that in just a minute. A deferred income annuity is offered by only a few companies. It is actually an annuity that when you make a deposit, a lump sum deposit, you can wait a chosen specified number of years when that money would be paid out to you. That will vary from company to company and annuity to annuity. Not many people use this, but some do, and there are a few companies that offer these. We can help you with that if your client is in a situation where they want a deferred income annuity. They're often used with a special arrangement, which I'll touch on in just a second. A multi-year fixed annuity is a guaranteed interest rate for a specific period of time. It has nothing to do with the stock market. It has nothing to do with the interest rate environment. Once that's locked in, that interest rate is locked in for the length of that period of time within that annuity contract. The company may change those interest rates after that specified number of years. It may go up, it may go down, but it can never go below what that initial interest rate was. A variable annuity, simply you put your money in the stock market and hope for the best. There will be some good years. There will be a few years that aren't so good. And there will be consternation in those bad years. And there will be elation in those good years. But you're on a bumpy road sometimes. Over a long period of time, obviously, history tells us that pays off. But you've got some times there that there may be a little doubt that comes in. It does create an opportunity for a higher return, but does include the possibility of a substantial loss. A lot of people back in 2008, when they were going to retire and their money was in a 401k, that loss hit big time, 30% average loss. A lot of people had to work another 3 or 4 or 5 years to be able to meet what income was needed throughout their retirement. So as someone gets closer to retirement, they want to be aware of the lack of dependability on money that's in the stock market at that time. A single premium immediate annuity, again, is a lump sum goes in. We will search for you and find for you the single premium immediate annuity that's going to offer the highest payout. Simply put, that's one of the tools that we'll provide for you when you do business with annuities with Benchmark and Messer Financial. The single premium immediate annuity can be for a specific number of years, or it can be for a lifetime. It can be a joint income for a husband and wife. Once someone begins receiving money from that single premium immediate annuity, with few exceptions, that is irrevocable. A single premium deferred annuity, and this is the most popular type. Some companies will allow money within the first 30 days after issue. Some will allow it during the first year. But a true single premium deferred annuity will only require money up front when the policy is issued. Most sales today are single premium deferred annuities. A flexible premium annuity is when someone, maybe a younger person who doesn't have big lump sums to place, they'll use smaller amounts, 100, 200, 500 a month, whatever they can afford, to put into a flexible premium annuity. So by the time they are in their 50s or 60s and approaching retirement, they'll have built up a very nice nest egg in that flexible premium annuity, and none of the interest that's been earned has been taxable at that time, which means it stayed within the annuity and built up more money, as we looked at earlier. Tax sheltered annuities are a type of annuities that are paid to employees of nonprofit organizations. The fixed indexed annuity, which is mostly the most popular today, this is it's not a traditional fixed annuity, as we mentioned earlier, where you've got, say, 5% guaranteed for 7 years, for example. This is an annuity where your money does not go in the stock market and not subject to risk because they have a floor of 0. Whenever somebody puts money into a fixed indexed annuity, and you can have flexible premium fixed indexed annuities and single premium, the vast majority are single premium, but you can't lose any money. When the stock market has gains, your client gets a gain. When the stock market has a loss, your client doesn't lose anything. They don't gain anything in those years. But if you look back historically, we have an average of about 1.5 years out of every 10 years that the market has a correction, and someone would not get any gain statistically for 1.5 years. But think about, if you look again historically, when we have a stock market correction and we have a big loss, 10, 20, 30%, like in 2008, what happens in the year or years subsequent to that? There's a recovery. So someone can be a little disappointed when they don't earn any interest in this type of an annuity when there's a market correction, but they're going to be very pleased because they didn't lose anything that they have to get back to get above water. They stayed at water level and didn't lose anything, but they get the impact of the recovery in the market in the year or two or so after a correction. So keep that in mind and make sure you mention that when you're talking about this type of annuity with your prospects. It does not require a securities license to sell. You need to be knowledgeable, and that's our job, to bring you up to speed so that you'll be the expert in the room when you sit down with your prospect, and we'll prepare you with a presentation that will guide you through and help add to your bottom line. The last note there, a fixed index annuity offers the possibility of a greater return than a traditional fixed annuity. If we look back over the last 30 years to 1995, indexed annuities have performed about 50% better than traditional fixed rate annuities. So we can't guarantee the rate, but we can look back historically and see that we're selling potential that has manifested itself in past years. The deferred income annuity I mentioned earlier, and this is getting into pretty much the deep weeds of annuities. I've only sold maybe a handful of these for someone who wanted to postpone those required minimum distributions we talked about earlier. If someone doesn't want to take that money out, they can postpone that up until as high as age 85 by choosing a QLAC, a qualified longevity annuity contract. That just allows people to postpone taking those required minimum distributions. But it makes some people happy, fits what they're trying to accomplish. It's only offered by a few carriers, but if you run across someone who wants to postpone taking their required minimum distributions, we can help you. When money is taken from an annuity, it can be for a certain period that your applicant requests. I want to be paid out this money I'm contributing over the next 20 years, 15 years, 10 years, 5 years, 30 years. I just worked with a client a couple of weeks ago who wanted to put this away, wanted to have a period certain of 25 years. His wife's a lot younger. She's going to outlive him statistically. He wanted to make sure that that money would continue long after his lifetime but provide, again, an income replacement for his widow. Should he go early, which he probably will, she'll be guaranteed the rest of that 25 years when he passes away as the beneficiary. You can even set it up on a joint and survivor life so that whichever spouse lives will continue that income. Someone can choose that they receive money for as long as they live, period. Now, that's good if they live to be age 95, maybe. Not so good if they live to be a year older than when they started the annuity, because it has no retained income on just a pure lifetime payout. That's the highest type. So if you live a long time, you're going to get a big return on your money. If something happens and you die prematurely, you're going to give the insurance company a lot of money and leave nothing for anyone else. I rarely sell this type of policy unless there's someone that has no relatives or no source that they want to leave money to. You can choose a combination on a payout of a certain period, and if you live beyond that, it'll pay the rest of your life, but it will guarantee that certain period. If you do die early, that money will go to whoever you've named as your beneficiary. So there are many ways that money can be paid out from an annuity, and you would want to help your client choose the one that's going to be most suitable for the goals, plans that they have, and where that money should go, not only during their lifetime, but after their lifetime. Key benefits of annuities. We've talked about the tax deferral. We've talked about in the fixed indexed annuity that your money is not in the stock market, but you get a choice, anywhere from 5 or 6 to maybe as many as 10 or 12 options, which are somewhat similar to mutual funds. Your money, again, is not subject to any loss, but if you think the S&P 500, which every company offers as one of a number of different options, if you like it, if you look back at what it's done over the many, many decades that we've looked at, the top 500 corporations in the United States, that's a good one to bet on. That can be one or one of several of your choices when you choose your options. Again, whatever you choose, if there's a loss, the losses are ignored. They're forgotten about. You don't lose any money in your fixed indexed annuity. Annuities do provide protection for funds that people have put aside for many, many, many years. They're going to make sure that money is preserved. If someone passes away with that annuity, that money goes to their beneficiary. It can allow money in flexible annuities. Money can be added at any time. Only with a single premium annuity is no new money allowed. If someone wants to have another annuity, they can choose a flexible or a single premium annuity if they have more money to contribute after starting a single premium annuity. The power of compounding. I think Einstein said that was the greatest miracle, the greatest mathematical item that he ever looked at was the power of compounding. When you've got money and that time is going to be your certainly your friend, to let that money and earned income continue to compound, it is amazing if somebody puts money away and let it grow for a number of years. And flexible income options. You saw the different types of options you have on payouts, and with an annuity, remember, you avoid probate. Your client will not have to pay any taxes at death on the money that's in an annuity. The annuity is an asset management tool. The 3 main things that it does, it allows you to accumulate, preserve money, and distribute money. Regardless of whatever type of annuity you have, they were issued by a life insurance company. Only life insurance companies can provide annuities. Yes, you can go to the bank and they'll have several companies that they're with that they sell annuities, but the annuities are issued only by life insurance companies. They're very well regulated. Annuities can be fair to the customer And that's something that you'll have a say-so in, because there are some companies that sometimes take advantage of applicants by paying out maybe big commissions. Remember, an annuity is a pie that's cut into 3 parts. If the life insurance company pays out a huge commission to you, the agent, guess who gets the short end of the stick, or the small piece of pie? That's your client, because you know the insurance company is going to get its fair share. So make sure that when you sell an annuity, you're doing it with a quality company, with a quality annuity, and that it's going to be fair to you and your client. We don't want your client to lose. That would be a reflection on your reputation. Okay, now those are the whys to sell annuities. And if you're not, you should be. Here's how, and it's going to be pretty simple. Go to the people you know, people that trust you, people that you've already have a relationship with. People buy from those that they trust. Your existing clientele is a fertile bed of prospects, not only themselves, but those that they can refer to you, people they know that are in similar situations. There are a lot of prospects that you can find in many, many different ways. In order to add annuities to your toolkit, or another arrow to your quiver, here's the key. Number one, when you're working with an existing client, maybe a health client that most of you have, if not all of you, and right now you're in this enrollment period, you need to plant some seeds. You need to leave an idea that you'll be back next year, maybe in the early spring or certainly springtime, and talk about someone's retirement income planning. You need to let your clients know that this is also something that you do, that you help people with. Remember, whatever type of insurance or annuities that we sell, we're helping people maintain their financial integrity. We want to make sure that their financial future is secure. Excuse me. And when we go back and look at their sources that are going to provide their retirement income, is it enough? Will we make sure that they'll have enough if they live to age 92 or 98 or 103, that they have enough that they won't outlive their financial resources? A good entree into this is, by the way, I know that you're going to retire soon, or you just retired, or whatever it may be. Look at their Social Security. Is Social Security going to be enough? No. In order to meet what they've become accustomed to in their lifestyle, they're going to need more than Social Security. An annuity can help them out. Do they have a retirement plan with their employer? 401k, 403b, tax sheltered annuity, thrift savings plan, whatever it may be. Have they put aside an IRA? Drop some ideas and let them know you're going to be back. When the health insurance is taken care of, you're going to be back and talk about some things that are just as important, because their retirement period of their life, when they reach that point, is going to be the most important period in their life. Does their retirement income that they anticipate, does it match up with their living expenses? I always, at this point, when I talk with a client, I look at 4 things. I look at what income they're expecting. I look at what their expenses are, their living expenses to maintain their lifestyle. I look at the debts they have, including mortgages, credit cards, automobile loans, revolving credit, and I look at what assets they have. What we've got to do is take those pieces of the puzzle, put them together. This is what we will do for you. This is what we will prepare you for when you go back in and sit down and talk with someone. If we have the pieces to the puzzle, we'll put the portrait together for you. We need to make sure that when people think about retirement, they think about more than just the money that's coming in from whatever sources it may be. We need to have them think about inflation and taxes and longevity and long-term care. It's going to happen to most of us for some period of our life. These are things that people need to look at beyond just how much is my retirement going to be and how much is my Social Security going to be. There are lots of other things that need to be looked at, including how they're going to handle taxes. So these are things that we can help bring into your marketing plan to make you aware so that you can make your clients aware. You'll be able to answer all or most of their questions, if not all their questions. But we'll be happy to bring you along so that you'll feel comfortable and confident in that sales interview regarding annuities. You can see why people can use annuities, why it can be a significant part of their financial planning. Since you're already there, you're already accepted into the household, you're trusted, they know you. Why not just ask a question or two, mention some of these things, let them know you're going to come back after the snow has melted, wherever you may be. Some of you may have snow, some of you may not. But once we're out of these enrollment periods, there's something that you can do that will benefit them first and that will benefit you. If you help people, it will help you. So let us at Benchmark and Messer help you by preparing you to confidently handle annuity sales. Make that part of your menu. You don't want to have just one or two things on your menu. You wouldn't go to a restaurant that only had one or two choices. We want to add some things to your menu. If you can ask those questions, get those answers, bring it to us. And we love to hear, hey, I got a guy or a gal. Tell us what you got. If you don't have enough, we'll ask you to go back and get a little bit more so we can present something that's meaningful to those people. Allow us to help you prepare that sales proposal and go over it with you. Answer your questions. Tell you why we did certain things. Go over the details that are going to be beneficial to your client. Let us help you with your company appointments for those that have annuities that are going to provide the most competitive, the most meaningful, the most accurate way for your clients to meet their needs in retirement. We'll help you get those applications, we'll answer your questions, and we'll make you the expert. Our goal is to take people that are primarily doing health insurance and to double their income. So here's the summary, and then we'll go to some questions that came in. Now, I hope you know why annuities are important and can be a tremendous benefit to your clients. The how is what we can help you with just by asking a question or two as you exit the home after you make that Medicare Advantage or that Medicare supplement sale. There's a lot more to the annuity than meets the eye, and we want to make you the expert. We want to give you the product design and that meets the objectives of your clients. That's what you bring to us. We're going to provide that for you. We're going to allow you to educate that prospect. Today, hopefully this is the beginning for many of you to get into the annuity business. We want to make you be an annuity specialist. Don't get confused by all of the facts and numbers and things. We'll bring you along as needed in your evolution of being able to sell this product confidently. So I believe I've reached the end of my period, Troy, and I'm going to turn it back over to you and see if we have any questions that we can go over.
Thank you, Bob. We are running low on time, but if anyone has questions, if you could use the chat feature over to the right and just type in your questions. Really good stuff shared today, and just annuities in general. They're great products. They provide financial security, like Bob mentioned. You know, a lot of times I hear from agents, you know, just kind of a reluctance or maybe a nervousness to just bring up the topic of finances. But maybe it's just a couple quick questions, like, has anyone talked to you about guaranteed lifetime income? And that's one of the most popular features of some of these annuities today, is that retirees can use their nest egg that they've accumulated, over their whole life, and they don't want to have loss for that nest egg. And here's a safe place to put that nest egg that'll still grow in a competitive way, but they don't have to worry about the risk of loss. And it can provide guaranteed lifetime income to them and even to their spouse. So really great features in there. Bob talked a little bit about long-term care. That's another hot topic, because you can use these annuity products to basically even have enhanced benefits if a person has a need for long-term care. So these are things to just bring up, discuss, and it'll get people thinking about it. Maybe most cases their financial advisor has not talked to them about annuities. And, that can be something where you can say, hey, we work with a team of specialists with annuities. We can show you some numbers. Their financial advisor can show them numbers as well, but in most cases, due to the large amount of carriers we work with, whatever annuities we're showing typically are going to beat what their financial advisor are going to show. So I'm not seeing any questions right now. I know we're running real low on time, but if you could call our department, the phone number for our department is 704-527-1211. And we'd be happy to answer any questions you have after this webinar. Feel free to email us as well. And there's also an attachment. It's called an annuity questionnaire, and this really just like 5 or 6 questions. It's kind of like a fact finder. If you click over to the right on the attachment section, you can download that questionnaire and use that when you're talking to your clients and you need to know what information you need to gather that you can bring to us, and we can help you with a sales concept or an illustration. So I'm not seeing any questions. Thank you everyone for being with us today. We look forward to helping you and your clients with great annuity solutions and great financial security. We wish everyone a good rest of your day. Thanks for being with us, Bob. Thank you so much.